Let's see. All right, everybody. So welcome back to a special live episode of the Trade for Yourself podcast, where you guys already know what my mission is. My mission is very simple. I want to help you guys learn how to trade and invest in the stock market for yourselves, okay? Please like, please subscribe. Make sure you click the link in the description of the video, okay? So what I want to do is I really want to have a preview of Q4. Okay, preview of Q4 to where we talk about the stock market. Okay, if you're catching the replay of this, I want you to make sure you listen to this. I want this to be the first thing that you listen to on Monday morning before the market opens. And so I have two special guests joining with me tonight, that being Nathaniel Bibbs and Nathaniel Rhone, founders of a community called Market Entertainment. This is a community based out of Birmingham, Alabama, that educates individuals about investing. They are known for highlighting that they are not financial advisors, but they do advise you to grow your money. Welcome, guys. Welcome.
Thank you, Devon. Thank you, Trade for Yourself podcast. Thank you.
Thank you so much, Devon. So happy to be here, man. Ready to share this wonderful information.
Good deal, man. Good deal, man. I'm glad, to be here with you guys, because I feel that, now is a very, very critical time for us to, talk about the market, talk about what's going on. And I would, I'm just glad to be here with you guys, because I know that you guys have some information that the people need. And so I'm just happy that we're able to talk about this and really put together a blueprint for the people going into Q4. So let's not waste any more time. Let's go ahead and dive in. So let's dive into where the stock market has been. Okay. So the S&P 500 has been up 11.28% year to date, down about 4.7% for the month of September. The Nasdaq 100 QQQ has been up 33% year to date, down about 4.4% for the last month. The Dow Jones is up 1.08% year to date, down 3.85% for September. And the Russell 2000, the small caps, are up about 0.87% year to date and down 5.72% for the month of September. So the first question that I have for both of you guys is, if you had one word to describe the stock market up to this point in 2023, what would that word be and why?
Yes, I can go first. I'll be short and sweet. Surprising. Surprising. For I guess all of last year, we were in a bear market. Down, beaten down in all securities, all major indexes. We really, with the data, with the chart studying and everything, we thought it was going to be a continuation. January 1st, 2nd, 3rd, boom, skyrocket of the market. So surprising. I'm surprised the market is doing so well, but it is to be expected because of everything that's going on. We'll talk about it later. I'm sure we will, about this being an election year, but it is surprising that we are doing so well. You have certain securities that are up, like you said, 20, 30, 40, even 50%, some over 100%. So surprising. I'll leave it there.
Okay.
Well, hey, my word is resilient. I would say the market have been very resilient due to the rate hikes. As Nate said, hey, we knew that Powell was going to raise rates and still raising rates. So, the economy is more stronger than a lot of people was expecting. As you know, everybody thought we was going to be in that recession, and that recession haven't came yet or haven't been announced.
Man, that is so crazy, man. The word that I have down is resilient. That is my word for this year, because everybody is telling us that the market is not supposed to be up right now. Everybody is saying that we've done all this quantitative tightening. We've had interest rates rising. You know, the feds have been removing bonds off of their balance sheet, all these different things. You know, they talk about their earnings recession and the upcoming recession, and they're saying that the consumer's not going to do well and all of these things. Yet the S&P 500 is up 11.28% year to date, and the Nasdaq 100 is up 33.36% year to date. And so it's very, very important to understand that the market tends to move on. And that's one thing I want everybody to understand. The market tends to move on. And, you know, big institutions, they're going to do what they need to do to get their performance. And so I appreciate the commentary that you guys had on the stock market. Look, everybody that is joining, I want this to be a like an open forum. You know, if you're watching this live right now, please like, please subscribe, but also put your questions down here in the chat. I really want these questions down here to come so we can maybe answer these questions and continue to have a open dialogue with all the people that have chosen to watch. Now, the next thing, I want to talk about the personal consumption expenditures, okay? The PCE index, okay? The PCE index is the Federal Reserve's preferred inflation metric. And this metric grew at its slowest pace on a monthly basis since late 2020, okay? Since late 2020. The PCE index grew 3.5%, up 3.4% year over year. And that's the index in totality. So that's, you know, bringing everything into consideration. The core PCE rose 3.9%, down 4.1% from a month prior. That takes out food and energy, which food and energy are your volatile components when we're talking about inflation. And month over month core PCE rose 0.1%, down from 0.2% a month prior. So in totality, all things considered, inflation is moving in the right direction. Now, the next thing I want to talk about is I want to talk about the CME Group Fed tool, the Fed Watch tool. Now, this is a tool that Mr. Rhone put me on. He put me on this tool, right? And this tool measures the likelihood that the Fed will change the Fed funds rate at upcoming FOMC meetings. So here's some dates I want to follow. On September 22nd, which was after the Fed meeting, there was a 72.46% chance that rates will stay the same at the November meeting. As of today, there's an 86.83% chance of the same. Next, on that same date, September 22nd, 2023, there was a 57% chance that rates will stay the same at the December meeting. And as of today, there's a 64% chance that rates will remain the same at the December meeting. The question that I have for you all is, what should we expect from the Fed for the remainder of this year? That's my question for you, based off all that.
Well, I think, in all honesty, I think the Fed is talking a good game. Don't get me wrong. The Fed has an obligation to bring down inflation, to make sure that things are affordable for the American economy, so the economy can work for everyone. I think that Powell is just barking right now. I think he knows, just like we know, that inflation have came down dramatically, and they are on the verge of breaking something. I think the next couple of rate hikes, if we need a rate hike, will only happen if the PCE or the CPI data comes in hotter than expected, which more than likely is not going to happen. Then certain data we don't even get before for the Fed meeting in November. So I think the same. I think hopefully next year they wind up cutting rates, but higher for longer is something that's been on my mind a lot lately. I'm starting to believe higher for longer. Nate, you got anything?
Not really. That's pretty much what same thing you all are saying. Even in him speaking about being data dependent, and we saw, as you just stated, inflation is coming down. So how long or when do you decide to start cutting rates if what you intended to happen is so-called happening? So kind of like you all, probably will get another pause, and we probably might will get, in my opinion, cuts beginning next year to help the economy out like they've already been doing.
Okay. I think it's safe to say that, upcoming data like the jobs report, like inflation, CPI, PCE, that data tends to swing these probabilities back and forth when the CME group tends to put these probabilities out. And so I think it's very, very important for us to understand and watch those probabilities, because that will kind of put us, I feel like that will give us a leg up if we're continuing to watch the data, watch what the Fed says, watch how the traders are pretty much pricing certain things in, and see how the market is moving. It's very, very important for us to understand that and to see the probabilities of these rates. Now, the next thing I want to get into is the US government. The US government. Now, a surprise deal came through with 45 minutes to spare to keep the federal government open for another 45 days on September 30th. So now the government will be open through October into November. Now, Rhone was talking about this a little bit before. He was saying that if the government was closed, right, we wouldn't get any data. But now that the government is open, that kind of curbs that uncertainty. We'll be able to get the data now. Currently, stock futures are up right now. Stock market is up right now. I want to say the Dow is up about 0.4%. The S&P is up 0.46%. The Nasdaq is up 0.58% right now in the futures. Okay. Currently, Bitcoin and Ethereum is up as well. The question that I have for you guys is a government shutdown that big of a deal anyway?
Go ahead, Ron. I'll let you take this one.
Well, first thing first, I want to say this comes every year. As everyone knows, the Democrats love spending and the Republicans so-called hate spending. So they have this bitter fight every year. What was surprising this time for me was they got it done before the deadline. In all honesty, I really did thought that the dysfunction was going to linger out a little bit longer. I think a government shutdown, when it comes down to the overall economy, is not that bad, but it plays a vital role. If the economy shut down too long, like you said, certain things, certain data, certain workers wouldn't be able to get paid, and who's going to work if they're not getting paid? So I would say that it's a headwind that the economy was scared about. I do see the market maybe getting a little relief, but we still have a lot more headwinds down the road.
Okay.
Interesting. But I'll leave it there. Yeah, that's interesting. Yeah. Who wants to work while not getting paid? And I'm glad he said that. That comes from the soldiers, those in the reserves, and all type of government officials, programs that's been funded by the government that can't, be funded if they're closed. So the 45 days is just a stall out to whatever's going to happen. What will 45 days do? If anybody has that answer, please put it in the chat. I am looking to read it because 45 days, when you've had more than 45 days at the beginning of the year and last year to get this rectified, $33 trillion worth of debt. The debt is not going, so we need to try to fix it.
Yeah. Go ahead, Rhone.
And I just want to say this too. I think that Ukraine is an issue that a lot of Americans
Yes.
is facing with. Do we fund them or do we let more people that's closer to them fund them.
Well, the
The
shutdown
U.S. government have gave out more, about 22 billion,
plus
about
6
70
billion,
billion. Yeah.
6
About
billion with this new little bill or whatever. 6 billion that is going to Ukraine. So
right. And with majority of that money, you could wipe away all Americans' health debt. So the debt that we have with the hospitals, the people going to get their medicine, you could have rectified all that with the money from Ukraine. So you got
our
a lot
student
of
loans.
you have a lot of Republicans that's hardline that don't want funding, while you got some Democrats and some Republicans that needs the funding because they see the bigger picture. They see us fighting Russia in Ukraine instead of fighting them, somewhere else.
I agree, man. I agree 100%, man. Me personally, the one thing I want to say, put that out there, everybody. As a long-term investor, you never sell stocks because the government was shut down. You never do that. The S&P 500 on average has gained meaningfully after an extended shutdown, gaining 18 to 19% on average and median basis 12 months afterward. At the end of the day, on the Trade for Yourself podcast, and I know for Market Entertainment, we preach long-term investing. We want you to build wealth. We want you to make money. And so selling stocks on a government shutdown is not what we should be doing. But if stocks come down from a long-term perspective, that's an opportunity for us to build our wealth. That's an opportunity for us to add to the S&P 500. It's an opportunity to add to QQQ. It's an opportunity to buy singular stocks like Apple, Microsoft, Tesla, NVIDIA, AMD, all the stocks that we talk about. And so just keep that in mind. Please do not get shaken out of your long-term positions because of a government shutdown. Please don't do it. I see people in the chat. I see people watching. I appreciate y'all. Please like, please subscribe. If you have a question, reach out to me in the comments. These are two people that you need to be talking to, okay? You need to get their insight, okay? Ask a question, please, because I do not want to take their presence for granted, okay? I do not want to take that for granted. Now, let's keep it moving on. So the next topic I want to talk about is September in the stock market. What has September done in the stock market? So the S&P 500 was down 4.72% in the month of September. The top three sectors: energy was number one, up 3.15%. Communication services was down 2.82%, and financials was down 3.52%. The bottom three, we had real estate down 8.2%, utilities down 7.2%, industrials down 6.12%. A couple of honorable mentions I want to mention. Information technology was down 5.78%. Consumer discretionary was down 5.22%. So these are two sectors, that have heavy weightings in the S&P 500. There's a lot of companies that we track that are in these two sectors, but these were not the two worst sectors out of all of them. So the first question I have for you guys is, why is September so negative? Why was it so negative this month? And why is it normally down in general?
Well, I'll say this. If you go back and look from January until maybe about June, the market have been on the tear. Like we said, the market have been surprising and resilient. I'm talking about the market have been running. And I think September, with all the headwinds, especially with, the news cycles that have been coming out, this was the cool down that the market needs. This was the cool down that the market expects. Crazy thing you said that every September be's pretty rough. Every September is the time for them to get their act together to get the government funded. So it's quite crazy that correlates inside. But hey, stay tuned, because we dropping them gems. Go ahead, Nate.
We are dropping gems, and I'm glad you said that about the dropping gems. And even just to piggyback off Devon, please get your long-term portfolios in order around September. September, you should mentally decide that, hey, I'm going to begin to get ready to DCA, that's dollar cost average, into those long terms. But September, let's just take it. Let's take it. We're coming off our summer vacations. We're going into school, and the latter part of that is Christmas. So what am I doing if I'm involved in the stock market? I'm really just staying stagnant, and I'm probably selling some to pay back the money that I may have used during vacation time. I'm selling a little securities to reposition into some other securities that I may be invested in. I may have had here at this peak point. I have all my tech stocks, and I see them falling as well, because now we're inside of school, college has begun, and we see everything's on a downward pour. So what am I doing? I'm pulling, I'm selling and selling. As we know in the stock market, as we sell, we're selling, that's caused the stock market to come down. Once we begin to buy around Christmas, around all these other special holidays, then the market will begin to rise again. But after the summer months, you get to June, July, we're going out of town. There's a lot of travel. So you have airlines up, you have tech going up, you have everything just continuously going up. Even as the market fall in September, what are we doing? It's about the third month of the year. We're back at school. Nothing is really happening. We don't have to grocery shop anymore as much, because the children are eating at school. So it all plays a factor in how we are spending our money. What are we doing? We're pulling from here. We're setting ourselves up. And history is going to always repeat itself. So if I know that the market is down in September, I'm going to pull out, because I know the big hedge funds, those who really move and run the market, are going to begin to do these things. So me as a retailer, I'm pulling out as well. So you have a lot of that can move the market if we all move in the same direction. And what we do, just set it to the side. He talked about healthcare being at the top. So what do? If we're selling tech, we're selling all the real estate, we're selling these type of stocks, we still want to put our money somewhere. And half the time, all the time, you got energy and oil, you got healthcare, that's where we're pumping our money. So September, my opinion, the fall off is because we're coming out of vacation, we're coming out of these things, and we're just here at a little standstill. Market is falling. Hey, I'm putting my money to the side and I'm holding out so I can reposition and get me something else.
Yeah. That's some very good points. Since I've been in the market, September has always been the month that everybody's always told me to watch out for. I kind of thought about, okay, so then today, well, not today, but this year, I kind of made the exercise. Okay, why does it always go down? I heard about what you were saying about, rich people going on vacation, that they go to the Hamptons and whatnot. They come back, they tend to sell those securities to kind of pay for those vacations that they had. Another thing I thought about too was, like Rhone was alluding to, about September 30th to October 1st. October 1st is normally the beginning of the fiscal year for the government, right? And so at the end of that fiscal year, they tend to slow down on spending, and they kind of figure out what the budget is going to be for that next year. And so I was like, okay, now it kind of makes sense. Now it kind of all coincides into, why September is historically this low month, Another thing is that, the market was down 4.72%. That's nothing to sneeze at. Now, we need to understand that piece, because what did Jerome Powell said? Jerome Powell said that, rates are going to be higher for longer, right? We saw the bond yields reach the highest rate that's been since 2007. We're talking about 4.6% on the 10-year. And so, it's been a very, very bad September, but I think that September, but also I think that provides opportunity, I believe, going into the Q4. And so my next question to you all is, can we see a strong Q4 after a lowly September? Is that in the cards for us this year? Do we have an opportunity there?
Ho, 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 Santa Claus rally, here we come. Yes, and yes, in my opinion. Please position yourselves. Please position yourselves. Hey, connect with Market Entertainment. We have live trading Fridays. We have pop-up. Yes, yes, yes. Devon has always told us about AMD. If you didn't get AMD when it was at $94, like he alluded to, he said it would go to $94. If you didn't get in, you actually missed the push when it got to 101, 99, 101, 102, and it's definitely on a tear. So yes, we are going to have a Santa Claus rally, in my opinion. You will have times to get in to some securities. Later on, I'm going to talk about a great swing trade that we're in that I'm going to get in. I'm going to stay in for a while. Yes, 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 we will have a rally, just in my opinion. But go ahead, Rhone.
Well, hey, I just want to chime in and say, I don't know. I think Powell may keep us in limbo for the end of the year. Keep things shaky until he tell us that something have broke. Crazy you said something about the real estate market. That's the thing that I'm assuming the Federal Reserve may break. So I see maybe if we get some good data come out and Powell don't be playing with us on the November meeting, we should. But I think the Santa Claus rally may be delayed like it was this year. You know, we had that Santa Claus rally in January instead of December. So we may get the same pattern.
Okay. I think that's very, very good to consider. The one thing I have to go back to this again, the government is going to be open through November. So the Fed is going to be able to obtain some of the data that it needs to make a decision about interest rates, which I believe will curb some uncertainty. If we didn't have that data coming in, for example, the jobs report is coming out Friday, CPI is going to be coming out in a couple of weeks. If we didn't have that coming in, I believe that would make the market more uncertain. But now that the government has pretty much, averted the shutdown over the short-term time period, right? And now we've had such a low September. I think that provides us a very, very good opportunity to take advantage of some upward movement in October before we get the earnings. That way the market can kind of move the way that it wants to move. Once we get to November, Jerome Powell may come out and he may play around and say, hey, rates are higher for longer and we don't know what the economy is going to be, and we don't know what the neutral rate is going to be. When we do the dot plot, it's just a projection. We don't really know. He may play around with the market at that time. But I certainly believe that October is going to be a strong month. We will end the month of October positive. And I think that we're probably going to end the year pretty positive. I think the market is going to increase. When we see a market up 11% like it's been, even through the downturn in September, I think it's a possibility we could see a 15%, 16, 20% end of year return, once the books are closed at the end of the year. So again, I appreciate everybody that's been on this live. Please ask your questions now. These guys are here. These guys want to help you, be successful. So please, if you have any questions, please reach out in the chat and ask those questions, because this is an opportunity for us to preview this Q4 2023. Now, next question I have is, and this is specifically for Rhone, do you want to tell the people anything about the bond yields? And are there any opportunities that can be taken advantage of in relation to bond yields, specifically long-term yields, 10-year, 20-year yields? I know we talked about this a little bit on Market Entertainment about looking at these yields. Is there anything you want to tell the people about the bond yields?
Well, I'll say it's not much I want to say about the bonds. We're still undergoing a little bit more data and research, but I will say the bond market is pretty strong. But you have big companies, you have big hedge funds that is not buying treasuries, not messing with the bond market. They're putting their money in market in marketing accounts. I'm sorry, been a long day. Money market accounts so that they can get that 5% instead of waiting on that yield to kick in. Maybe that 2-year, that 5-year, or even that 10-year. They get that money quick. So I think bonds, we may be. Stay tuned. Check out Market Entertainment for the update on them bonds, because them bonds, hey, I'm telling you, an opportunity is brewing. That's what I can say right now.
Yeah, I'll say this, man. I think that if you're a long-term investor and you're willing to wait, I believe that the long-term yields, specifically the 10-year and the 20-year yields, are very, very cheap right now. And I believe that you can buy these treasury ETFs very cheap, and you can hold these for a few years, I believe, and get some strong return and get some strong income coming in. The reason why I say is because we talked about how a recession hasn't been announced. We talked about how, the recession may come, but we know what happens when the recession comes. Investors go to safety. And so if a recession comes or the stock market goes down, investors are going to go to those bond yields for that flight of safety. It's the highest bond yields have ever been since 2007, 2008. So for me, that tells me that's an opportunity to be investing into a 10-year note, 20-year note. That's an opportunity that we need to think about. We want to be patient about it. We want to, look at everything in the totality of the landscape. But I think that provides an opportunity nonetheless. Is there anything you want to say, Nate, about the bonds?
Hey, you guys did a great job. Hey, I'm thinking about investing in now with that knowledge you just shared. Other than that, no, you guys, hey, we have two fundamental geniuses on here. If you want to know anything about the fundamentals of any security of the stock market, trust me, these two brains here, Mr. Devon Elder, Nathan Rhone, even meeting these two gentlemen and seeing how they ping pong tennis match off each other's brains when it comes to the fundamentals of the government and the market, man. I love it. So, hey, I'm enjoying it. You guys go ahead.
Good deal, man. Good deal. So, before we close out, if you have stayed on for this entire time, now I believe you're going to get a treat. Last question. Are there any securities that you all would like to discuss? Is there anything that's on your mind? Is there an opportunity out there? Is there any stocks out there that we need to talk about?
Yes. First thing first, I just want to come on and thank you, Mr. Elder, for allowing Market Entertainment to come on your platform and just have a great conversation with you. The security that I want to talk about is Berkshire Hathaway B, well known as Berk B. Berk B is a Class B form of Berkshire Hathaway A. I'm gonna give homework to all your viewers. Go check out Berkshire Hathaway A and go check out Berkshire Hathaway B stocks and see which one can you afford to invest in. The one that I would say, Berk B is coming up to some attractive prices. I'll say that, especially if they announce or when the recession gets here. I definitely see Berk B taking a little haircut for everyone to load up on. That's all for me. Check out Berk B, Berkshire Hathaway B.
Okay. Very, very good stock. Very, very good stock. Nate, do you have any securities that you'd like to discuss?
Just one. We talked about it earlier. I think we did. SoFi. SoFi is fintech. SoFi is involved in student loans. As we know, student loan payments are they turn it back on. You guys got to begin to start paying them back. This is security that we actually swung trade in the beginning of the year, where we security from $4 to $8, and then we wrote it back down from $4 to $9. We did what we call double ups, where we pumped $20,000 into a security, swing traded. We just be patient. Remember, the market, if you're patient, will give you that compound interest, will give you great returns on your money. So SoFi, So far right now, under $8, great buy. Definitely under $7, a great buy. So it's a company that I would like for us to look at. Please put that on your watch list, as well as AMC. AMC has been getting a lot of talk here lately, but y'all keep your watch out for those two securities. And y'all know we love Apple.
That's a fact, man. That's a
Out,
fact.
man. Y'all don't waste y'all time on that AMC. The AMC might be a corner.
I'm gonna tell you like this. I got two stocks I want to talk about with you all. The first one is going to be AMC. So have a question for both of you guys. I want to put this out there. Beyonce is reported to be finalizing a deal with AMC Theaters to release a Renaissance World concert film. Okay. This is a tweet now. Here's a chance for y'all to make a few thousands to a couple 100,000s. Because that film will drive AMC stock back up the roof, a lot of y'all missed this wave in 2021. Here's my question. Should the Beehive be considering buying AMC stock?
100% no. I think that Adam Aarons is a phony baloney CEO that uses the retail investors to make his pocket more deeper. I think if they can capitalize on the 8 movement or the security that they launched with 8 trying to real deal I forgot the word. Real deal trying to push down the shares. So I definitely think that AMC is definitely not a good buy. I think Beyonce, they're trying to get some more celebrities to come in so that they can bring back the retail investors, bring back attention to that security. I think it's a dying company. They had time to try to shake back. It didn't work. Well, I'm not gonna say it didn't work. They took on too much debt and it's hard to pay back now.
And for all those reasons, this is why I say yes. Not a long-term hold. Please don't hold it long hold. But the swing trade, the pump and dump, whatever you want to call it, this is an opportunity, in my opinion, because they also in talks with Taylor Swift. The two women that they say have, boosted the American economy because of their tours. They have a following, not just in America. They have a following overseas in other countries as well. So why wouldn't I capitalize off it? Why wouldn't I make this some fake news? You can even see AMC in the morning. If you're looking at pre-market, please watch pre-market AMC. Even if it moves up 50 cents, 80%, 80 cents, $1. That's a movement that you can capitalize on. Because remember, we are in the option market as well. We are option day traders. So what can I do? I mean, 1, 2, 10 contracts, capitalize on that movement as well as the fall. So not a long-term hold, if you ask me, but if it is a hold that you want to swing trade, maybe 1, 2, 3 months, and just see what happens with it. Don't want to say I'm a financial advisor, but I am going to advise you to grow that money.
Man, I'm gonna tell you like this. There's nothing wrong with there's nothing wrong with a little speculation in your portfolio. There's nothing wrong with it. Like what Nate said, this is not a long-term hold. This is not a set and forget. This is not none of that. But it is okay, in my opinion, for you to do a small bit of speculation, because stocks move. They move off of fundamentals, but they also move off of stories. Stories can then move fundamentals. I don't know about y'all, but I think people have been breaking the bank to try to go to this Renaissance World Tour. I think they've been breaking the bank, breaking their household cash flow to go to this tour. The people that weren't able to go have pretty much heard about it or whatever. And so now I think that the people that weren't able to go to the tour, it's a possibility they could be going to AMC to see the film, to see the feature film. Even if you went to the tour, you may do a double up, go to the film too. So it's like, from an earnings perspective, stocks move off of stories and earnings. AMC could potentially, increase that EPS pretty substantially because of that. Correct. And so stocks move ahead. So again, we're trading it, we're trading speculation, we're trading the movement on ahead of it, right? We're not holding this forever, because once the earnings are reported, then the stock is eventually going to come back down to earth, and this is just a once in a lifetime type of deal.
We're
But
buying the rumor, selling
exactly,
the news.
buying the rumors,
Or
selling the news.
or just like you said, he is capitalizing on certain people not being able to afford going to the big concerts. Or he see the fan base, kind of like Colorado and Coach Prime, and hey, they bringing
Yes,
in that revenue.
yes.
That's all I got to say. I don't
It's
want to
all
get
about
deep in
marketing.
it now.
Look, just always remember it's all about marketing. All news, be it bad or good, is good news for your company. What it's going to do is drawing attention to your company. Those who have never, ever decided to look at market entertainment is going to look at market entertainment now, because why? We're on Trade for Yourself podcast. When Mrs. Devon came over, we all communalized, we got together, more eyes came to Trade Yourself podcast. So all news to me is good news. Buy the rumor, sell the news. I don't want to miss out. This is a thought. A lot of traders or a lot of news subscribers to the market or whatever. I don't want to miss out. I don't want to miss out, because last time AMC rolled up, GameStop went here. So that's what you're going to have. You're going to have a lot of FOMO, fear of missing out of this great security, air quotes. You're going to have a fear of missing out, and then you're going to have some who's just going to buy just for that reason alone. So that's why, not a long term. I would, I'm not an advisor, but I'm definitely going to advise you not to put this in your long term. But definitely a good swing trade if that's something you want to do. It's definitely just like SoFi. If you want to put it in there and do a good swing trade, now SoFi will go, it is in my long term, but I'm just letting you know that. But just like with that security, you want to buy it and then sell it. It will be opportunities because of all this news for AMC.
Yeah, man. Yeah, that's yeah, that's good. That's good.
I got a question. Do y'all think that Ape will catch some of that movement, even though they tried to shake out the shareholders? And for all the retail investors that own shares in these companies, please vote. Please vote. When they send it to your email, please vote for the representative, for the calls, for the amendments, for anything. Vote, because you are a shareholder and your vote matters. But I think, well, question was, do you guys think that Ape, the ticker symbol Ape, will move because of the news as well as AMC?
I think that's a big possibility, because management tried to play this game with Ape, with the shareholders and the investors that hold AMC, trying to give them an incentive to continue to hold AMC by offering them Ape. And so I think it's kind of a situation to where, a rising tide will lift all boats. AMC will rise, Ape will rise. So yeah, that's my opinion on it.
Well, I'll say this: if you go back and look at the CEO and some of the board members, they haven't purchased any shares in a couple of years. And to me, that's shocking. That's worrying that you're putting so much value in your company, but in your own pocketbook, you're not investing in it.
Mm-hmm. Mm-hmm. Yeah, that's a good point. That's a good point. That's a good point to take into consideration. Nate, you got anything on that?
No, great point. You always want to look and see what the big money is doing. We always follow the money. So just to say Tim Cook, if he begins to start selling all this Apple stock, I will get worried. I will get very worried. So Elon Musk, like he did before, start unloading Tesla. We saw what happened with Tesla. It began to tank. So yeah, always follow the money, especially those who are CEOs of the company, those who are very heavily involved. You see the CFO. If you see a whole bunch of board members begin to start selling, please look for those type of signs.
Okay. Cool. Good deal. Before we get out of here, again, please like, please subscribe. Everybody continue to do that. Look, you still have an opportunity to ask questions. We haven't cut the live off yet. So if you want to sneak a question in the live chat, go ahead and do it now before we get off of here, because I want to go into my last stock. The stock I want to talk about last, that's AMD. AMD is Advanced Micro Devices. We talked about this before. You know, AMD from a year-to-date high reached about $132. If you've been watching the Trade for Yourself podcast, I've been talking about how I believe that this is a stock that's going to do well. It's a stock, but from that 132, it came down, and I believe that it bottomed out at $94.46. But I believe that was the bottom, because now the stock is now up about 10% from that bottom price. And I believe that we had some flushing out due to the September woes. Now we see the Nasdaq up pretty significantly in the futures. So now I think that AMD may continue to have that rise and go up that ladder. Right. Here's the one catalyst I want to talk about. I want to talk about how AMD is going to be releasing their AI chip in Q4. That is the catalyst that I believe that's going to continue to keep this stock rising. That particular release of that chip is still intact, and it's still a very, very good catalyst for this stock to rise in Q4. But not only in Q4, but 2024, 2025, 2026, because this is a company that is competitive, has a strong CEO in Lisa Su, and the shares rose almost 5% last Thursday after Microsoft's technology chief said that the chip maker is bolstering its position in artificial intelligence with the company, right? Microsoft is a very, very, Microsoft and AMD have a very, very good partnership. Okay. Microsoft likes to use NVIDIA's chips, but they also like to use AMD's chips as well. Microsoft utilizes AMD chips in the Xbox, the new generation Xbox, and Sony utilizes AMD chips in the new PlayStation. And so when Lisa Su was talking about these different things, she was saying that, hey, it's very, very early in artificial intelligence, and she believes that there is not a moat that can be taken out in artificial intelligence. What does that mean? She believes that there's going to be so many winners in AI, and she believes that AMD is very, very well positioned in this particular market, because when we talk about moats, we kind of talk about a competitive advantage to where people are kind of going to a certain place because they're just used to it, right? You know, for example, Apple has a 97, 98% satisfaction rate when it comes to iPhone. When you go into that Apple ecosystem, you're probably not going to come out of it, because it would be more of a hindrance for you to come out and switch to something else. And so what Dr. Lisa Su is saying, she's saying that, hey, NVIDIA is a good company. NVIDIA has those GPUs, but our GPUs are going to do well as well. And she's saying that, hey, her clients are chopping at the bit to be able to get those GPUs. So I'm telling you, AMD is not just a good company that I believe is going to perform well in Q4, but I also believe is going to perform well going into 2024 and 2025, 2026. Solid long-term investment that I wanted to talk about for my security that I wanted to pretty much bring to everybody. You know, does anybody have any comments about AMD or AI or anything like that?
Hey, I just want to say that AMD is trying to play catch up. They're trying to compete with NVIDIA, and they may be on the road to compete with NVIDIA. Hey, that's all I got on AMD. That's Devon, baby.
Yeah. I'm glad he's so adamant about it and continue to study it and bring in that. That is one semiconductor that I have considered adding to my long term. And I appreciate him telling me to get that at $94 because we did ride that $7 movement up on the option market. So I appreciate that. Thanks for studying that security. Yeah.
Yeah, man. Yeah, that's amazing. That's amazing, man. But I think that our time has been well spent. I think that we've talked about a lot of solid information. I think that we've given people a solid Q4 preview, man. Like, understand that, you know, the stock market is really where we build wealth. You know, it's just my preferred way to build wealth. I believe that it's a tool in our toolbox that we utilize in all other aspects. And in Q4 is the time that we need to lock in. Today is October 1st, right? It's the first day of Q4. Start this Q4 off right. Number one, start the Q4 off right by tapping in. If you're just now coming in, go back and listen to the entire episode, because a lot of information was here. A lot of information that we got here. Second thing is, tap in with these guys from Market Entertainment, because they're going to continue to give you the information that you need to be successful, right? Look, this is the time that we come in. It's the fourth quarter, right? Champions are won in the fourth quarter. Games are won in the fourth quarter, right? So don't miss out on the opportunity. Tap in, get locked in, and really, truly just ingrain yourself in this stock market, because this is where you want to be if you really want to truly build wealth for yourself. Before we close out, I want to give you all an opportunity to just talk a little bit about your platform. Tell everybody where they can find you. What do we need to do to find Market Entertainment? Please let me know.
Go ahead, Rhone.
Well, Market Entertainment is a group designed to help make money daily in the stock market. We also do long-term accounts. You can find us on Telegram. You can find us on TikTok, and we're working with our IG right now, Market Entertainment. We're just here to educate. We are a community-based, just looking to help out the average person learn about the market while building wealth long-term. The goal is long-term, but hey, we see another downtrend, and I just want to say this, 2022, Market Entertainment rode that market down, and we're ready to ride it down again if it's necessary. But something we learned, because we're in the option market, we play both directions. We hit that certain percentage, get in, get out, make that money daily while building that long-term account. So, hey, check us out. It's totally free. We're just here to help y'all. Go ahead, Nate. You got anything you want to add to that, man?
No, I'm glad you let everybody know that it's free. It's a free platform, and that's what I want to make sure everybody understand. This information you're getting here was free. We're here free on YouTube, on the Trade for Yourself podcast every day. Devon gives you knowledge that is free. You have this type of knowledge we're giving out that people are charging hundreds and thousands of dollars for. So these are free platforms that you can be involved in. We got involved in it because we were, Rhone and myself, we were just texting each other, talking to each other every time, and said, hey, man, we need to share this information. Let's not be selfish. So that's our goal, to not be selfish, to always share the knowledge with everybody. Yes, we've had bumps in the road. We've messed up and blown accounts, but we did all that. We had all those bumps and bruises in the road, so we could come to you and say, hey, you don't have to go down that path. Start your long-term investments, get you a good ETF, get you a great security, just pump your money in, do your savings, do all those things that it takes to continue to grow your wealth. Because remember, to leave an inheritance for your children and your children is something that is great for me, you, and everybody else. The one advantage that most cultures have over our cultures, and I'm just going to say it just like that, they leave inheritance. They leave money that they don't have to, the next generation don't have to struggle like they struggle. So this is what we're doing now. The stock market is where this can be done, that can be realized, that the compound interest, the education. Why didn't we do it? Why were we scared? Because we just didn't have the education. But now the education is there. You can look it up on YouTube. You can Google it. You can go to your Trade for Yourself podcast. You can tap in with Market Entertainment on Mondays on our free calls, Friday on our free call. If you're in the option market, we do live trading on Fridays. Yes, when I say live trading, we are in the option market making money definitely on Friday. So if you want to get more involved, please remember Market Entertainment. You can Google it. It'll pull up. You can go to your Telegram. Or if you want to just text me, 205-356-6382, and I'll give you more information.
this is what I'm going to tell you. And I don't think that these guys are going to be mad at this. If you're watching this episode live, I appreciate you all for tapping in, because I know that you're really locked in, right? If you're watching this live right now on a Sunday night during Sunday Night Football, you're locked in, and I appreciate you. But I still appreciate the people that come and watch on the back end. So this will be uploading to my podcast platform early in the morning, early on Monday morning, because I want you to listen to this before the market opens on Monday. In the description of my podcast and in the description of this video, I'm going to have the link to get to Market Entertainment. The link is going to be in the description of this video, in the audio and the YouTube, so you all can tap in with these guys. I come over there, we put the information out there because we got to stay tapped in at all times. So if nothing else, man, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Special live episode with Market Entertainment. Like, it's been amazing. I appreciate you guys for tapping in. Nate, close us out with the same. Close us out, man.
Well, I appreciate you, Devon. Thank you in the Trade for Yourself podcast. Remember, don't pay for it, trade for it. And like we always say over here, we are not financial advisors, but we do advise you to grow your money.
Hey, man, let's go kill Q4, man. Appreciate y'all.
Thank you.